My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. One of my friends, just trying to make you some money, put in context here. My job, entertain, educate, teach. Call me, 1-800-743-CNBC, or tweet me at Jim Cramer. How many times have we seen this movie before? We hear that the president and the Chinese government have reached a tentative phase one trade deal, potential delay in new tariffs, maybe even a rollback, and of course the market soars. The Dow gaining 221 points, S&P climbing 0.86%, and the Nasdaq falling 0.73%. What do we say? Hallelujah? That was easy. I don't mean to trivialize the importance of this news. It does matter. It absolutely matters that President Trump might be willing to reduce the tariffs on $360 billion worth of Chinese goods by as much as 50%. That's some of the chatter. Or also canceling or forestalling the tariff hikes that were supposed to go into effect this weekend. That would have affected a lot of consumers. China is apparently willing to make some major agricultural purchases while doing a better job of enforcing U.S. intellectual property rights and maybe opening up their market specifically to the services and especially the financial services industry. And that's a big deal. But, and this is the world's biggest but, the days when a China deal could control the fate of the whole stock market are long gone, even as we act as if it is all that matters. It did seem that way at one time because initially the market reacted to the tariffs as they were going to cause a worldwide recession. This whole deal or no deal game seemed a lot more significant then. Now, though, the trade war has only escalated, yet our economy is in fabulous shape, our stock market keeps surging to records, and job growth is extraordinary. At this point, this phase one deal with China, let's call it the icing on the cake. Even if it falls through, the cake's still pretty darn good, and if we get something signed, it could even be better. But as I'm about to go through it, it's just a small part of the S&P 500. That's why I want to explain what's actually at stake with this phase one trade deal that we heard about all day and how we can potentially profit from it. Because then, again, it's not mad politics, it's not mad China, it's mad money. First, let's be clear. What do we get in exchange for Trump agreeing to roll back some of the tariffs and hold off on others? What's at play here? What can go right? Well, it's an agreement that very specifically benefits some major institutions. At least that's what it sounds like to me. And you're looking at them. J.P. Morgan, Citigroup, Goldman Sachs, Bank of America, American Express, MasterCard, and Visa. If everything goes right for the U.S., this tentative deal would let them establish a strong presence in China, and they'll finally be able maybe even to compete directly against Chinese operators rather than being forced into partnerships with them where they would steal all the intellectual property and perhaps even my bank account. Okay, the financials have roared here, but I think they're still worth buying. Even J.P. Morgan, which is the most extended, that stock has had a big move. You know what? I like American Express the most on this because a China deal would give it enormous cachet in the People's Republic. I'm just looking at the pastiche and deciding that this is the one that they'll like the best. My second favorite will be Goldman Sachs, which needs to get some growth here. China could provide it. Visa and MasterCard could easily have more upside, and the CEOs, time and again, in the old days, have told me if only China would really let us in. Well, if they do, look out above. Again, all these stocks are excellent. And even if the deal somehow falls through, the valuations are not that bad. So other than for this one, and I happen to like it and Charles owns it, you can handle any deal that breaks down and still do okay. I have to say that because think about what's been going on. The second echelon is tech. This morning, we got a very discouraging note from Credit Suisse about a possible 35% drop in Chinese iPhone sales. Plus, they point out that the tariffs could raise the cost of an iPhone here by 67 smackers. Apple was down more than $2 when the president first did that tweet that made people feel better about stocks. But at the end of the day, you know what? The stock closed in the black. And you know what that says to me? It says, so much for trading, not owning Apple. Own Apple. I mean, even today. Okay, this deal will keep status quo for Apple here and maybe give a nice boost in sales over there versus what the Credit Suisse note says, hence the rally into the close. I've been adamant that you should have some 5G Internet of Things exposure with a deal looking very likely. You know what you want to own? Yeah, my dog, who's got some sort of kennel cough that's kind of annoying. I hope he does okay. Because the Chinese regulators will finally perhaps let them acquire Mellanox, Israeli company that should be immediately added to earnings if it can close. Everyone's going to get so excited. All the analysts will be all bulled up. I also think the more traditional 5G-oriented chip makers will work, even though they're up a lot. Skyworks, Qorvo, Qualcomm. I'm focusing on Marvell Tech because it's still not its 52-week high. I'm a big fan of AMD, but it ran too much today in anticipation of still one more manufacturing problem at Intel and also some very high-speed new products that Lisa Su put out. You know what? I've got to tell you, in anticipation of delays of Intel, I'm going to say don't own Intel, all right? Now, after the bell, Broadcom reported. I thought it was a good quarter. More importantly, they gave a big dividend boost, and that works too. Go buy fractional shares. It's $300 What else? I think people are wagering too much on some of these traditional cycles here. And that means you've got to be thinking about Caterpillar, Honeywell, or Cummins. Sure, their numbers might go up if the trade war's really ending, but I don't go crazy with them. Hey, look, I'd love to recommend Boeing if they could just fix the 737 MAX. Unfortunately, it doesn't seem like they can. So these, Chow just on this, but these we have to be careful because numbers can still come down. But you know what really catch fire, even though it maybe shouldn't? Energy. I think the machines that control so much of the day-to-day action are set to buy energy stocks on any news of it, I think. I know this to be a fact. That's what I do for a living. I discover these things. Schlumberger, probably best in show. Chevron did well today. Exxon, down and out BP. Those are trades like Caterpillar, Cummins. Don't overstay your welcome with any of these. Now, let's drill down. Let's get exciting. Let's go to Hasbro Mattel. They've been trying to shift their sourcing away from China. Mattel's made a lot more progress than Hasbro. Remember we had Mattel CEO on the other day? Both stocks surged on the news today. I think that they've got more room to run. When we talked to the CEOs of Hasbro and Mattel, we were very conscious that this weekend's tariffs were going to hurt them inordinately. They're really in the crossfires. Well, guess what? If we do delay or scrap December, these are going to be two stocks that you can still own and buy. I like Mattel here. I think you can go much higher because otherwise the prices for the toys would be prohibitive. It's not just toys. The whole retail cohort's been a winner here. What is the one that has been hurt the most? Dollar Tree. It's been hobbled by the trade war. Upside. Home Depot's been trashed. Some of it self-inflicted. Upside. Walmart and Target, they work. They spend a lot of money in China. The best thing about these retail stocks, there's not a lot of upside built into them already. Makes them attractive. On the other hand, let's talk trades. Macy's and Kohl's. With Macy's, I think the estimates are probably too high, even if the tariffs get rolled back. Kohl's needs to see more momentum from that Amazon partnership. You can return your Amazon purchases in person at their stores. These work only so far as you can throw them. Best Buy and Foot Locker have the most exposure to this weekend's computer and footwear tariff hikes that are now being put on hold, perhaps. Best Buy had a terrific quarter. Foot Locker did not. Best Buy investment, Foot Locker trade. Nike, never in trouble. Still some short sellers betting that because of their China exposure, they would miss. Sneaker Kingpin reports next week. Investment. Just like Nike, Starbucks, never really in trouble with China. I've liked this story ever since CEO Kevin Johnson came to us at the U.S. Air Force Academy, told us he wanted to back up the truck at $81. Investment, not a trade. Trade. Las Vegas Sands, the casino company with a huge presence in Macau. Chinese gambling haven, got a 4.7% yield. Winner, winner, casino dinner. How about transports? FedEx, trade, roared today, been hurt by China. Numbers are probably too high. It can get a bounce. Investment, Union Pacific, the most China exposure and doing a lot to buy back stock and clean up their operations. Finally, some oddballs. Waste Management used to sell a lot of garbage to China, believe it or not, before the trade war. Hey, stock did nothing today. I like that. Stanley Black & Decker. Sources a lot of stuff from China. That's why the stock was up 5% today. It's worth noting, by the way, the president's got the pulse. He met with the CEO of Stanley, CEO of Cummins, and CEO of Union Pacific. We just got to find out who's meeting me by the stocks. Now, that's a joke. All that said, I still think the best way to bet on a trade deal is by presuming something's going to go wrong, even after today's encouraging developments. Why? Because despite this tentative agreement from China, I expect them to renege. Talk is cheap. Transforming your legal system and your economy is expensive. So next week, I'm going to go back to our regularly scheduled program and start talking again about stocks that have nothing to do with the trade war. But I know people have been demanding this list. I read my Twitter feed, and other than a couple of knuckleheads who really despise me, I know that's what you want. And the guys who really despise me, you know what? You can't stay away from me. Anyway, the bottom line, now you know what works. Now you know what's going to happen. I just remember, please, these are mostly short-term trades, Buy. Sell. Not investments. And then we're going to go back next week to the hundreds of stocks that have little or no relationship with the trade war or the trade truce. Hey, by the way, once again, I mean, how stupid was that guy with the trading Apple? I mean, look, if you want to sell it now, fine. But trading Apple, it's supposed to make a noise. Okay, anyway, let's go to Mike in Florida. Mike.
Hey, Jim, how you doing, buddy?
I am doing well. I'm blasting the people who say trade Apple. Do you mind? How about those people? How much did they cost you?
I have a question.
Go ahead.
I'm actually calling about Delta.
Delta.
With Delta, I've been holding it for a while. I have a large position in there.
Okay.
And they've had a good run, but they're kind of stuck in a range.
Yeah.
And now with the 737 kind of coming back into the service sometime in the near future sometime, I don't know if the influx of all those planes coming back to service with the other carriers is going to put pressure on Delta.
Let's talk specifically. I mean, the airlines are an okay group. They're very inexpensive. The stock of Delta is very inexpensive. The stock of Apple is very inexpensive. I would rather own Apple than Delta. Just top of mind, because I still can't believe that someone took you out of the stock just today, right on the eve of the agreement. All right, the tentative deal, let's talk about it for a second while I do this. The tentative deal, one trade deal with China can give a lift to a lot of stocks, even some surprising names. I'm giving you my list. Is this kind of like subliminals, kind of like let's go out to the lobby and buy some 7-Up? Use your judgment. You're mad money to buy some potential winners, but remember, a lot of these are trades. They're not investments. Mad money tonight, I'm talking to an investment, the CEO of Adobe, fresh off of its blowout report. What does the market rotation out of cloud software stocks mean for the company going forward? Then with news that a trade deal may have been reached, I'm going to tell you why there's no time like the present for China and the job explorers to pay the piper. And last week I asked the co-CEOs of Robinhood if they plan to add fractional trading to the platform. They demurred. Well, guess what? They're not demurring today, so you can go buy $1 worth of Apple, or even 50 cents or a penny. Or you can have that Credit Suisse guy whamma-jamma you out of your own money. So stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.